Yes. Well, first of all, I think geopolitical tension is increasingly becoming a material factor in our stock selection process. Um, I think over the last few years' time, we have been trying to see how the policy comes out and impact our portfolio companies. And it actually is getting much busier when we had to revise our financial models based on the geopolitical tension, based on the terms such as the trade war, sanctions, executive orders. I think um, what we had concluded in the last few years' time was geopolitical tension do play a crucial role, despite we're a bottom-up stock picker, based just purely based on fundamentals. But it's really coming in and have a negative impacts on the fundamental level. So yes, I think the we could avoid some of the geopolitical tension by assessing how sensitive it is to the external world and how the developments of the geopolitical tension is heading to and make us to act faster and take a more preemptive measures to avoid this risk. And that being said, I think it's also looking at how China is responding to the geopolitical tension, because we have to understand the responses, and literally we understand how different sectors will also be affected by the reactions of the Chinese government. So have that being said, the last few years' time, the portfolio construction actually has been changed a little bit. That we're focusing more on domestic economy, the localization of the process, because that's part of the China's policy agenda to rely less on external environment and build more resources and strengthen what they have domestically. So I think this is one of the very key major highlight that we had conclude over the last few years' time, in the wake of all this geopolitical tension and policy reactions.